257,276.47%. Just let that number sink in for a second. I mean, imagine the sheer scale of wealth creation we're talking about here. This isn't a typo, and no, it's not a century of compound interest either. It is the frankly absurd 5-year return of a single stock we're going to be looking at today. It's the kind of figure that just absolutely makes you drop whatever you're doing and pay very, very close attention to what's happening in the market.
Welcome to today's Explainer, everyone. We are breaking down the latest data from Money9 Live for today's market analysis, focusing on mega multibaggers and overarching daily trends. Let's get right into it.
Okay, let's dive into this by first laying down our macroeconomic foundation. Because, you really can't understand the micro movements without checking the broader picture, right? Well, the markets are having a fantastic day. The BSE Sensex has surged ahead, up 472 odd points. That's a solid 0.61% increase, putting it at 78,236. And right alongside it, the NIFTY 50 is totally mirroring that strength, jumping nearly 145 points to stand strong at 24,415. So what does this actually tell us? It means there's a highly robust bullish undercurrent today. Investors are jumping in, and the sentiment is just super optimistic. But as we all know, the really fascinating stories, they happen beneath those big index numbers.
Section 1. Diamond Power Infrastructure, the hero stock. Let's shift our focus away from the macro and zoom right in on the vanguard leading the charge today. So, what exactly triggered today's crazy movement? Well, it was a massive 435.71 crore rupee valuation for a colossal new order that Diamond Power Infrastructure just secured. Literally, the second this news hit the wire, the market reacted instantly and aggressively. The stock, which had been sitting at 218 rupees, immediately triggered a 10% upper circuit limit. Now, if you're newer to the mechanics of this, hitting an upper circuit just means the stock reached the absolute maximum allowable price surge for a single trading day, and trading actually had to be halted because there were only buyers and absolutely zero sellers. I mean, that is the literal definition of incredible market momentum.
And this brilliantly illustrates how raw market momentum is almost always grounded in real-world, tangible business applications. Let's break down the anatomy of this 435 crore rupee order. First off, the location, Hyderabad, which we know is a rapidly growing tech hub. The project itself, a huge 310-megawatt data center. Now, we all know data centers are the absolute backbone of the modern digital and AI economy, right? And they require an immense, continuous amount of stable electricity. That is exactly where Diamond Power steps in. Their operation here is supplying the critical high and low tension power cables needed to keep that entire facility running. And perhaps the most crucial thing for investor confidence, look at the key clients involved, L&T and Blue Star. These are heavyweight blue-chip industry leaders. Securing an order to supply their projects validates Diamond Power's operational capabilities in a truly massive way.
Moving on to Section 2, market contrasts. Not everyone is winning.
The stock market is rarely a rising tide that lifts every single boat, and this stark contrast really highlights that perfectly. On the one hand, you have Diamond Power Infrastructure hitting that 10% upper circuit, totally driven by infra and tech sector demands. But then, on the exact same trading day, under the exact same positive macro conditions, we have a heavyweight like Kotak Mahindra Bank facing a completely different reality. The reports note that Kotak is sluggish and currently trading in the red. This is such a crucial lesson in market analysis. Sector rotation and individual company fundamentals will very often outweigh broader index momentum. Basically, a soaring market can still have giants struggling under very specific pressures. All right, Section 3, rapid-fire market updates. Let's pick up the pace a bit and look at a couple of other significant movers flashing on the radar today. First up in our rapid-fire segment, we've got Bandhan Bank. Unlike the sluggishness we just talked about with Kotak, Bandhan Bank's stock price is actually up 2% today. Why? Well, it all comes down to a really fantastic Q1 business update. They reported that their loans and advances surged by 16.4%. And honestly, that kind of double-digit credit growth is exactly what investors are hungry to see in a banking stock. It pushed their total volume up to a really impressive 1.55 lakh crore rupees. It perfectly shows how outstanding quarterly growth metrics directly and immediately translate into positive momentum for a stock. Next, let's take a quick look at the pharmaceutical sector. We've got Granules India, whose stock has also climbed by roughly 2% today. So, the crucial point here is understanding the catalyst, which is purely regulatory. Granules India managed to secure a highly coveted sole first-to-file status for one of its drugs from the U.S. regulator. In the pharma world, that status is a game changer.
It often grants a period of market exclusivity, which directly translates to massive pricing power and huge profit potential. It's a prime example of how just a single regulatory nod can spark immediate investor interest and drive a stock's value right up.
Now, before we wrap up today's analysis, it is essential I share this statement directly from our source material today, Money9 Live. They clearly state, Money9 Live does not advise investing in any stock, mutual fund, or IPO. This is for informational purposes. Always consult a financial advisor. And as your host for today's explainer, I want to echo that. I am simply breaking down the reporting and the data to help you understand the why behind today's market movements. We're analyzing the trends here, definitely not endorsing any specific financial action. Always do your own due diligence.
Which brings us to our final thought for today's explainer. We've looked at incredible 5-year returns, massive data center orders, and the stark contrasts between booming infra stocks and sluggish banks. But as you process all of this, I want to leave you with a question. Beyond the flashy headlines and those crazy 10% upper circuits, how do you personally evaluate a stock's underlying fundamentals before investing your hard-earned money? Do you look heavily at order books? Are you watching for regulatory approvals? Or is it something else entirely? Keep learning, keep analyzing, and I look forward to exploring more fascinating concepts with you next time.